Okay, good morning, everyone, and welcome to this morning's event. My name is Mark Tobin. I am the founder of Coffee Microcaps. For anybody who's joining us for the first time this morning, and for any of our regular attendees, welcome to this morning's event. You're very welcome back. I'd like to give a quick shout out, to DMX Asset Management, our sponsor for all our virtual events here at Coffee Microcaps. If you're looking for a smaller microcap fund manager, be sure and check out the PDS on the DMX Asset Management site. You'll also find their latest monthly reports and performance numbers on there, all the details, or indeed reach out to Stephen or Michael. Quick compliance and disclaimer slide. For anybody who is joining us for the first time this morning, the companies we generally have presenting on here on a regular basis are capped under 300 million in market cap, in revenue and approaching cash flow break even, or indeed are already profitable. Generally from outside the resources and biotech sectors, what I call industrial microcaps. That can be microcap technology companies, microcap healthcare, microcap consumer goods companies. Structured this morning's webinar, we've got one company presenting this morning, so we're going to try and keep it at 30 minutes as normal, where we'll have a 20-minute preso and then 10 minutes of Q&A. If you do have any questions for our presenter, please type them in the Q&A box rather than the chat function. It just makes it easier for me to moderate questions. Please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel tomorrow morning. You can follow us on pretty much all the socials, Twitter, YouTube, for this recording, and indeed all the other recordings. We've well over 100 companies presented now, so plenty of content if you want to see some more presentations on the YouTube channel, LinkedIn, and I also write a free monthly newsletter which you can get on the Substack platform. The next edition of the newsletter will be going out next week, Monday. Our presenter this morning, I'm delighted to be welcoming back Christopher Clark, CEO of Delta Drone International. So I am going to stop sharing my screen, and Chris, if you want to start sharing your screen.
Perfect.
I'll let you know once I can see the cover slide. Yeah, I can see the cover slide of your presentation now.
Great. Thanks so much, Mark. Thanks and good morning to everyone, and thanks so much again for the opportunity, Mark, to be part of this. I am very, very proud to present sort of Delta Drone's quarterly report, sort of a quick summary. We finished up last week, so we've really been doing quite some interesting things at Delta Drone as a sort of a drone services company. But let me introduce it sort of straight away. So what is Delta Drone? DLT is essentially a tech services company that's really much focused on the mining and the agricultural space. We started the business about 10, 11 years ago. Started in Johannesburg and grew it out throughout Africa, and recently bought a business about 18 months ago based out in Perth. The business is around about 74 people now at the moment, and really our customers are these large-scale enterprise mining customers who we have long-term contracts with. And ideally, what our customers, the pain point which we're solving for them is really around understanding their mine in this near real-time fashion. So drones really present this incredible opportunity of flying at scale and flexibility and very high frequency to be able to capture these data, their mine and farming sites. And because you're able to deploy very, very quickly, you're able to extract a lot of operational information out of these very highly accurate 3D models. Which is really changing the game for where mining and especially precision agriculture is going. Just a quick sort of, I guess, little overview, and we'll go over into more detail into the highlights of our quarterly results. But we really decided, as a company, as a microcap itself, to really start aligning ourselves within sort of how we report as a tech company. So we've got a lot of very new metrics which we'd like to show, and as well as sort of discuss a little bit about a new contract which we recently signed up in Australia with a mid-tier mining giant. So let's start off on the metrics and what we decided to do as a company. Now, if you're really kind of looking at DLT in itself, we're sort of sitting around about that sort of 7 million sort of market cap. But you really, when you sort of start sort of breaking through the layers a little bit, you're starting to and look at the real what actually makes it the components of the business. We really started to want to bring this a lot more to the surface. And we decided, in addition to this quarterly report, instead of only just bringing out sort of the cash component, we're really looking at putting out the revenue, reporting the revenue numbers, as well as the new metrics of annual recurring revenue, ARR, and total contract values, TCV. And the idea behind this kind of now reporting on these new metrics is really to allow investors to understand the key drivers and the value base of our particular business. So what maybe a lot of investors don't know about DLT is that a large part of our business is really recurring. So kind of like sort of the SaaS model, where you're getting sort of software revenues on a recurring sort of basis. We're signing up these large contracts, that on a long basis, where we're flying every single day and providing this data on a daily, weekly, or monthly particular basis. And that's really what sets us apart from a lot of other drone services companies across the world, is to be able to execute this kind of business model consistently on a daily basis. Very, very few companies can actually do this at scale in our particular market. So when we're looking at these new basics and these new metrics as well, an annual recurring revenue of currently of 1.7 million. So this is a normalized value where all our contracts with at least an initial sort of 12-month period, this is what we're looking at billing. This is subsequently increased actually, sort of post-quarterly announcement. We signed up a new deal with Commodity Mine, which bumped up our ARR to about 1.9 million. So you're seeing a lot of growth in this, in sort of our sort of an annualized sort of billing and sort of the sales pipeline, as you say, which feeds into this next metric of total contract value. And this number represents the total remaining sales pipeline of the business. So now, if you take this all into context, saying, well, really looking at what we did in revenues last year, just over $4.5 million, got another 3.8 in the pipeline, really sort of forward looking, and you start combining all of these metrics with our business, looking at the revenue, the cash sort of perspective, you'll very quickly be able to see that we really stand out as a very special kind of business, in that we're really near to that break even sort of point, and we've got enough cash in the bank after the divestment of the Parazero business earlier this year. So we're really feeling quite confident as a business that we're really in a good space. We've got enough runway to get where we need to go, as well as something to really communicate the growness of this business in terms of its actual sales pipeline. So yeah, we're really kind of just building up that steam very, very slowly, but slowly and surely, and laying down these really, really good roots in Australia, especially around great initiatives like Beyond Visual Line of Sight. These kind of programs, took us over a year to get with the Civil Aviation Authority. And while there might be 3,000 little drone companies in Australia, less than 30 of them have actually got this Beyond Visual Line of Sight accreditation, including us. And really the opportunity, the way that we're looking at this is building these points of difference, being able to, again, interact with customers, really large customers at that much higher service level. And really probably, when you kind of look at the opportunities before us, with enough cash in the bank, a really good sort of runway of deals coming along, all these operational advantages available to us, it really creates an interesting opportunity in a highly fragmented market to probably look at doing a couple more acquisitions. So there's a lot of long-term sort of scalability in this business model. And the great thing is that it's really well proven. It's, drones are very mature technology now. Customers are very accepting of that, and how they integrate that into their operational processes. Looking a little bit at our recurring growth, and again, we're going to really start using these metrics on a quarterly basis, and as we sort of bring them out as well. but I guess a lot to really get to focus on is actually on the Red 5 deal. So being our first long-term contract, it was really great. Negotiating with these kind of customers, because again, they need this particular kind of survey data. They're getting more than just survey data, but we're really working them by allowing us to focus on the drone technology. The customer can focus on taking rocks out of the ground. And we're able to add on a lot of other ancillary sort of benefits around that data and how to make their operations a lot more effective, especially when you've got these long-term relationships. So we got a lot of attention around that. That was a really, really, really great deal for us. And it's really opened up a lot more doors, and people are now a lot more open-minded to our particular services model, rather than customers struggling to do it themselves and to keep crashing drones. Our Africa business also still continues to grow and show a lot of fruit for all the hard work that we're doing. It's always generally quite quiet period actually for us, generally into the June, July sort of time, with a lot of customers sort of having their financial year ends. But this was quite a different year and a good year for us overall. Looking at the sort of the business side on the revenues, we've continued to grow the revenue bases, and we'll go down through a breakdown of this in a moment. Cash receipts were slightly behind for the quarter as well, but we're expecting those to pop up. Just a slight sort of timing collections with with that particular time of year, but nothing out of the ordinary. And obviously we just continue slightly on the revenue side, and we've actually adding to a lot of this now with the recent sort of renewal of Khumani. I think they actually even upgraded their contract as well, so there'll be some sort of new net numbers coming through there. What's really, really exciting, market, really about this particular business is, a lot of companies sort of just put out their cash or just put out the revenue, or just, we could just have left it at just reporting on the particular ARR number. But what we really want to do is also take this opportunity to look at the historical breakdown of our revenues, in the past, and really to show that, yes, there are some parts of our business which are once off, and some parts of our revenue which are recurring and contracted. But we've got this really interesting sort of category B of revenue, where it's been with customers who may not be in a committed long-term relationship yet, but they've been with us for really, really long periods, like over a year, and they've been sort of ordering the same service on a weekly, monthly, or annual basis through us. And actually, a lot of this sort of missing sort of patty in the middle, I guess you could say, of revenue is really came from when we bought our Vista business in Perth. A large majority of the business was sort of ad hoc once off, but they had these really great customers and great relationships. And really, it was just really about taking our former business model and pricing, and just going to these customers and saying, look, you've been with us for so many years. Let us negotiate a longer term contract, and let's start converting you into a better pricing regime. You're getting the same, if not better, service as well, better sort of value. We're just looking for the commitment. And what we're seeing is slowly but surely, some customers might start off with a 3 or a 6 month, and that's pretty typical of how this goes. But what we're committed to is that long term, once customers have been with you for those 6 months, they go to 12 and to 24 and 36 months, they sort of increase their commitment. And that we really wanted to kind of highlight that as part of our business, that yes, well, nearly 30% of our business is contracted. So anything where we receive longer than 12-month period, we've got this really special amount of revenue that's been recurring throughout this business. So if you're looking at this from an investor point of view, you're seeing a business with nearly 60% of this recurring business model that's got this flavor of really a great growth, consistency, commitment from the customers that are really sort of coming through. And then you see in the orange sort of points there as well, the ad hoc businesses, or the ad hoc sort of job revenue that's come off, which also creates a really great, interesting opportunity, because every new customer always comes through as a once-off job first. Then they like what you see, what you do, generally to prove a concept, and then we sort of transition through the revenue phases there. So we've got a really beautiful little business here that's got a really strong, healthy pipeline. We got very strong and strong financial models and understanding of those models as well. So we really got as a management team, got a really good grasp on what are the key drivers within the business, and how to drive that value towards shareholders eventually as well. So that's really what we would like to really sort of focus on for this last sort of quarterly. We're quite excited in terms of how the business is going to transform with these particular numbers, and the value that it will eventually sort of stream down to investors as well as they follow us on this particular journey of our revenue and our revenue growth.
Thanks, Chris. Just a couple of questions. I'll start off, and hopefully we'll get a few in now from the audience. But I know you're literally just back from Diggers and Dealers in Kalgoorlie. I was just wondering, having been at the conference, what was the kind of feedback you were getting from? I'm sure one or two of your customers were there, but from prospective customers, are they kind of open to investing in their businesses and looking at this technology? Or as you were making your way around, what was the kind of general mood at the conference? Was it one of, we're willing to invest, there's a lot of optimism in the industry, or was the vibe a bit more cautious, we don't know what's happening, interest rates are going up, inflation is a concern? And what was kind of the overall feedback you got from it?
Yeah, Mark, it really was a great experience. My first time at Diggers and Dealers as well. And generally, I would say that the general sort of impression, I think, from meeting a lot of these CEOs and COOs at these stands, you're getting really exposed to about 60 of them as you sort of walk the halls, and a lot of confidence. I think a lot of mining operations took the opportunity to raise a lot of capital in the last couple of years. So a lot of them seem to appear to have enough money in the bank. So a lot of optimism, which was really, again, great for us as a supplier into that industry, because they were very much sort of open up to the opportunity of dealing with tech companies like ourselves. For us, it creates we use it as an opportunity to test new ideas, so to really go to customers and to understand what are your particular pain points and what are your focus areas sort of going forward, and how can we adjust and customize our products to match sort of that line of thinking. Obviously, a really big thing, especially for a lot more of the established players, is really around that ESG factor. So how do we monitor and manage and report on our assets a lot better, which really feeds into what we do as Delta Drone as well, which was really interesting. So we've got a lot of great sensors on board that really help on the environmental side. We're actually doing some of that work now for again, ad hoc jobs for some customers who are really concerned about the environment, around manifold mounds, about monitoring their rehab success, around seeding programs that they're doing. And drones all play a very key now part within those aspects as well. We also had a really great discussion around a couple of CEOs where a big concern for them is, again, within the ESG space, is the diversity of their particular workforce. So, they're looking at obviously transitioning and bringing on more female representation, as well as a lot more Indigenous representation into their workforce. And the very beautiful thing about Delta Drone, and probably maybe I could sort of crudely say it, is that we've built a model that's kind of like the McDonald's of the drone industry. When we kind of started out with this business in Africa, we always designed it for scale. So we knew that when we were going to be setting up operations in these multi-jurisdiction areas, we had to design our training, induction, and all our systems and our content to be able to work for pilots who would be coming from these particular areas. And so we've really got this beautiful sort of franchise model that can really take anyone. Generally, it's younger kids, and we're giving them a drone license, and we're putting them into an environment where the templates are all set up, the processing machinery is all there, the drones are semi-automated. It's really about pressing the buttons at the right time. And then as sort of a support team, we're monitoring that and managing that remotely and doing the quality checks. And really some of the great discussions which we're having is about how do we take some of these younger kids out of these local communities and be able to engage them into a mine in a very safe space, but also to do something that's more than just driving trucks. It's really you're getting involved with tech and technology. And when we're having these kind of conversations, and we're really working on these partnerships as well, because this is something that's really important to us, is how do we develop people and combine the tech as well while delivering value for shareholders. And as we're having these discussions with these local partners and the CEOs, this was something that really sort of spiked their attention. Said yes, very, very interested. We want to make a big difference and contribute there as well. Please get us, call us on that. So sometimes it's quite interesting where you can take a particular model, and if you just adapt one of the ingredients, which you can really do in this particular commercial model of ours, how you can sort of really lean on what the priorities of today are.
And I just wanted to focus in on the licensing that you've got from the Civil Aviation Authority now. Does this open up the ability to sell more services to existing customers, sites that previously you wouldn't have been able to service without the certification, or is it more it opens up dealing with customers that weren't I guess keen to deal with Delta Drone until this licensing was in place? I just want to understand a bit more the opportunity that it creates by having received the license now.
Sure. So Mark, I guess if you kind of break up drone services, you could probably put into about three different streams. I think on the one extract on the left, the first sort of stream would be around really these what we call close range operations. So I would say it's where somebody's going to the store, probably buying a consumer grade drone, about $2,500 each. They then, excuse me, they're then going to weddings. They're doing photography. They're doing basic inspections, but they're really keeping it within the sort of restricted visual line of sight, within 500 meters of the pilot. And you can, and that is pretty much where majority of drone operations are. In the middle sort of stream, you're looking at what we call sort of mid-range sort of operations. That's where we've built up predominantly the back of our business. So we're using a lot bigger pieces of equipment. Generally these drones are going, between 30 and 40,000 a piece. And we're operating them between 5 and 10 kilometers from the pilot. That's where about 80 to 90% of all our customer demands and needs are, due to the size of the mines and the farms, and where we built our particular contract business model is in this mid-range sort of drone sphere. You also see a lot in the news sort of on the long-range side, where drones are going 60 to 200 kilometers, and these are conducting very niche operations such as deliveries or gas and power line inspections over these great distances. And again, there's really a lot of opportunities there as well, higher margin opportunities, but less number of opportunities. On coming back to the short range on the far left, you have thousands of opportunities, but very low margins. And that's why we sort of picked the middle in saying, for us to really make a difference, but find the right unique number of opportunities, in the hundreds, but being able to build, over $1 million a year per that opportunity, we've sort of had to really compete and push to get this beyond visual line of sight. And this allows us to engage with mid to large tier customers. These customers, this is just one of the tick boxes that they want you to have. It's not just the BV loss. It's not just the health and safety. It's really high certifications that you need to operate on their sites and over their particular airspace. And there are very, very few companies that can do that, not only nationally, but at a global scale. And that's how we're really kind of building out who we are and what we do, is we just focus on doing 80% of our customers' needs really, really well at a really good price, and then let the customers themselves, if they want to go focus on other niche, go take a photo or inspection, they can go do that work themselves, because they could probably do that quick and fast and have a drone in their pocket. But we then take care of this mid-tier, mid-range work of operating between 5 and 10 kilometers from the pilot. Saying all of that, though, we're also very keenly aware of where the world is going and how these drones, which are pretty semi-autonomous, are now going towards a fully autonomous, and we are investing into those kind of technologies, and currently doing a couple of internal sort of proof of concepts for ourselves before we start testing out on a couple of friendly customers as well, because that's where the world's also going to get, where we're seeing a lot of the downstream effect of especially the long range operations. And if you look at the delivery space, some of the key sort of advances which they've brought to the market is the ability to fly multiple drones to one pilot. And as soon as you can crack that you can transform those approvals into practical operations, that's when your business becomes truly scalable, and the margins improve at exponential levels, especially in Australia. So we're really keen on that, and again, it's all about not only just having all of those approvals, but how does that actually transform into a commercial offering that you can sell to customers, and something that they understand and something that they value at that particular rate. So yeah, we're continuously developing all of these technology ingredients into the perfect recipe for them.
And just on that technology investment, I'm just trying to get a sense of R&D spend, CapEx. I understand as customers come online, to buy the physical drones, to cover that particular contract. But in terms of the imaging software, or the reporting that feeds back to clients, whether they're getting it daily, weekly, monthly, and what reporting they're getting, is that a kind of an expense that we should be monitoring moving forward, or is this something you've kind of already built into the model? That kind of development work has been done and dusted up front, and it's the odd upgrade here and there.
Yeah, so Mark, so the way, and maybe let's use the Red 5 as an example. So how it works with Red 5 is that they're paying a single fixed price, and there's a slight there's a rise and fall provisions within it, but so they're paying a fixed price, which is their sort of guarantee, and we take care of everything else. So the pilot, the hardware, the software, and we're placing all these elements on site and flying every day. Because actually, at the end of the day, the customer actually doesn't want a drone, right? They want the data, and that's what we realized very early on, and why you're seeing a lot of this transition within the way in which we communicate about our business is a couple of years we'd say, oh, it's a drone services business, but you'll slowly start seeing us talk more about the sort of tech services and this data services, because the customer doesn't really actually care what drone you use and how much it costs. They're really looking at what's this cost per megabit of data that I'm getting, kind of like going to an ISP. So that's the way that we're sort of transitioning and selling and packaging the business. The way that we're doing our cost model is, yes, we're really, because of the size and how long we've been around, we're really getting all of these cost components at a much better price than the customers could even get themselves. We're passing on a lot of that benefit and saving. So we've really got a strong business case, for them already when we're sort of presenting this fixed price option. But we also know how to take care of our aircraft, because we're training up professionals, drone specialists. We're doing the required maintenance, just like how you do in manned aviation. Every 100,000, 10,000 hours, motors are getting changed, batteries are getting changed. As long as you're taking care of your aircraft, these aircraft, we've got some of them which will last longer than the actual contract themselves. Sometimes even up to 5-7 years. Because if a wing cracks, it's not a problem. It's you're just sort of changing the wing frame. It's very, very modular. So we're very because of us being focused, this is something we're taking care of our assets, and because it's our focus, it really ends up it's a model that works out very well for everyone.
And then if I could do one final question just on pricing, I guess in the Australia business, where you're trying to move people away from this month-to-month style model to, you know, something along, okay, maybe not as big as the Red 5 deal, but is that more, you know, making the monthly recurring a lot more expensive on a per unit economics basis, as opposed to saying to somebody, look, if you sign up for 12 months, your kind of per unit economics is going to look a lot better, and just like really incentivizing them to sign up for longer term periods by making the kind of month-to-month rollover a more expensive option.
Correct. So very much like, I mean, like kind of a software or SaaS sort of model. The way we're sort of presenting to our customers is, you know, the longer the commitment, the better the per monthly pricing it will be. And that's why, you know, when they're getting, and it seems to sort of be 3 years, it seems to be that sweet spot for them. So yeah, it's definitely hitting the market well. That, you know, the customers, you know, they know the life expectancy of their mine, be it 10, 15, 20 years. So for them, a 3-year commitment, you know, is very easy, because, you know, they know what they're getting at the end of the day, and they need the survey data. It's just, you know, drones are only going to be increasing in usage on mine sites, not decreasing, and so for them it was really very easy value add, because you're not just getting survey data, you're getting geotechnical data, you're getting environmental data, you're getting, you know, a lot of this benefit, and actually the big thing actually is actually solving the labor problem. You know, we got a bit of a labor crisis, especially in the mining environment here in WA, where you just can't find people. And because we're sourcing pilots out of non-traditional roles or sort of areas, you know, generally sometimes out of manned aviation, what you're finding is that, you know, we're not competing with surveyors in the labor market, where we're now allowing surveyors to free up their time. Instead of them on a customer site flying drones and being in the sun for 6 hours, they can now focus on doing what they do best and doing the analytics and the reporting. And then we're focusing on the data capture and the processing element.
Okay, Chris, we're actually slightly just over time, but thank you very much for coming back and giving us an update on all things Delta Drone. And yeah, we'll keep an eye out for the upcoming quarterlies and tracking the new metrics.
Thank you so much, Mark.
Thanks, Chris. Thanks, everyone. And I wish everybody good rest of their Thursday.